They are located in Davidson, North Carolina, while serving all of North and South Carolina to the Florida coast and the Tennessee mountains. They are the Mortgage Planner, the Carolina's #1 mortgage radio, premium lending experience, along with mortgage planning that builds wealth. Ranked top of the nation for over 3 generations, 3-time best-selling author, here's your host, Brad and Jacob Roche.
Welcome to The Plan. This is Brad Roche, the Mortgage Planner, 704-412-2727. Direct dial to the show and go to fortheplan.com. Good morning, good afternoon. Jacob, how are you?
Good afternoon.
We're rocking and rolling. You've been golfing, brother. What's been going on? We went and did a closing. Let's just bring it right out first thing on the show. You went golfing in beautiful course. Tell them where you were at.
I was at Sunset Beach. It's called Thistle Golf Club.
Thistle Golf Club. Yep. And you enjoyed it. I saw a couple pictures.
It was a good time. It was definitely a good work trip.
So here's what we're looking for. If you're listening, you own a second home at the beach and you'd like us to deliver documents to you, no problem.
Yeah, it works out very well in our favor.
No problem. Well, we were in a time crunch with locks and different things going on with their deal, and they were local here to Lake Norman, own another house out at the coast, and we wanted to make sure that we took good care of them. If you have a second home, primary residence you want to have under management, be sure to connect with us. We'd love to be able to link you into our software. And what does that do for you? Gives you complete value update, AI scrubbed right down to stainless steel appliances, gives you the value of the property, recent sales around the property. It gives you alerts on the market conditions. Am I missing anything here?
If you are looking for a second home or investment property at the beach, it does give very good short-term rental projections.
The software does,
yep. Yeah, it does. How much it can be rent out per night, how many nights it'll be filled per month. It gives a lot of good data on it, so I'll be sure to check that out.
Did you download the app?
I did.
You did, and you put your house in.
Yeah, it works.
How'd you like that?
It works very well. It's cool to be able to refer back to it whenever, not just when you get the monthly emails, but to be able to open it up yourself and go check current market, what do they call it, climate? Yeah,
it does your whole zip code is what I've noticed.
Yeah.
And have you used any of the buyer searching in there?
Yes, I have.
Why have you done that? You're not moving. What are you doing? It's kind of fun to surf around.
I look around. Like if I have to enter in a property for one of our clients, even that's where I go to recently.
Okay, and check it out. Check out the value report on that. Yeah, because it's going to give you a lot better market condition than any Zillows or other listing sites out there.
I find it. I just get curious when like a client goes under contract. We'll look up the property and see if it's a good, bad, medium buy, or it'll give it on like a scale. So I like to see that.
Well, so monthly reports, you can get that at fortheplan.com, number 4, theplan.com. Pretty easy to go to, 704-412-2727. Call us with any questions on it. October 30th news article, you want to hear this one. They did September existing sales report, and that came in really, really good.
Good. It should have. Rates came down.
Yeah,
but it came in September.
But yeah, and they did. And, the Fed came out, lowered the rates. We got better. Existing sales grew 7.4% in the month.
So as soon as
as
soon as rates dropped, it seemed like existing sales grew. And then rates came back in October, and now we're right back to where we were.
The next headline, October. Well, let me stay on this one though. Did you notice we got busier?
Oh yeah.
So did I. Now, a lot of us, including me, I don't know, I won't speak for you, have said, hey, we get in the 5-ishes, 5.8, 5.9, anything with a 5 in front of it, you're going to be busier. So were we there? Like I would say, you would say yes. Yeah, I would say more 6s. I would.
High or low 6s, and then some government programs, high 5s.
Great point, because we actually have one that came in a little late into the market moving and was quoted at 5.5. They were starting at, when we had spoke to them. So some of this, it takes a lot of timing. You can see how quick that can move for someone. Hey, are you thinking of maybe refinancing? And we call them up. And then they think about it over 3 to 4 days, and that can be a big change in a quarter rate.
Yeah, if we're not locked in. And plus, people buying a house, if you get a 30-day contract, I mean, coming into it, you get quoted, takes you 2 weeks to find a house, and then you come back to us.
It's a tough market right now.
Rates up.
Wouldn't you be irritated? I'd be mad.
Yeah, if you didn't know how that worked, I would be too.
Well,
I've thought about that.
You think about it, it's like you get approved and qualified, and you get X rate quoted to you, let's just say 7, 6.5. Couple days go by, 3 days, 2 weeks go by, and then you get a half point higher quoted to you.
We've compared it a lot of times to like buying a car, and when me and you buy a car, I think we compare it because it's the closest thing that we can compare it to buying a house, right? So, I'd be annoyed if I went to go buy a car and then 3 days go by and now your payment's actually up $40 or whatever.
More than that, depending on what you buy. You're talking car money right there. You do it on a house, you get a little bit higher. So a lot of times in this kind of market, and markets adjust, markets change. We always quote a little higher, and I think that is a good thing for you as the buyer. But I also think if you don't understand it, that it can really hurt our business because we're preparing you or cushioning in a little bit more. Yeah. And they may say, oh, I thought you said your rate was at 6.75. Well, no, it is at 6.5 or 6.3 right now. But when this market and the climate we're in and the changes we're in, wouldn't you rather have worst case and we come in a lot better? And sometimes to our defeat, I would call it, they're going to shop around, and which we do as well through our system. But then they say, man, I found something lower, and we never really talked about it. They didn't give that chance there.
Yeah, it's important to get on the phone with us and discuss through it a little bit more before just jumping ship, I would say.
Yeah, well, and not everybody does, but I can see that. But you have to understand there's planning in this, that we don't want to make a mistake of buying too much or getting too far in or not getting under contract and then being surprised.
Yeah.
And it could go the other way. We're all Nancy negative here. Let's not do that, right? I don't know Nancy, but it's negative. But they can go the other way.
Yeah, no, you're right.
Meaning better interest rate.
Yeah, which is always a good surprise for a client. It's always an easy phone call.
Yeah, that's much easier than, oops, hey, this is what happened. And it's not even an oops. It's unpredictable to certain days. But that's what you're hiring us for. We got good software. We manage that as well. But if you want that software for your house you own, go to fortheplan.com, check it out. October mortgage demand stalls as interest rates surge. 5 straight weeks of incline. That was since the Fed dropped. We've only gone up.
Yeah, wow. They
Wash
said
it right out.
Rates are going down, then they go back up 5 weeks straight.
With the election being done and things of that nature, you're going to see a difference in the markets, and we'll continue to keep you posted on this live every Friday, 3 p.m., every Friday. Same place, same time. We love doing it. Let's talk a little bit about the market conditions of what a buyer needs to know, or even someone investing. We kind of have summarized that a little bit in the balancing act of the market or interest rates moving. But, if I'm an investor going in, I'm going to ask for closing cost if I can get it, because I'm trying to hang on to my dollars right now.
Up to 2% for investors. They can get seller contribution, which, that's really paying for a lot of your closing costs.
I'd even pay more for the house.
Yeah, I agree with that.
I would increase the price if it allows, appraised value allows. It's going to appraise. I would pump the price up 2% and say, hey, chip in towards my closing costs, because then I get in and keeping my cash. And not always would I say do that, but when cash gets a little thinner, here's my point. A while back, years ago, we could take a 20% down investment property, second home. This is probably 6 years ago, maybe 8, I'm guessing, since they changed some rules of how they priced these loans, and they've just made them more riskier. So there's a lot of benefit in when you have 20% down. It was an easy deal. You got a good rate. It wasn't even an adjustment to a lot of these loans for investments in second homes. Well, now they adjust it, and that's the bigger problem that we ran into of being affordable or watching your dollar. So we're going to talk a little bit more about that when we take a quick break. You're listening to The Plan. Welcome back to The Plan. This is Brad Roche, joined with Jacob Roche, 704-412-2727, or go to fortheplan.com. We left talking about back in the day on investment property, second home, where they didn't have some adjustments to the interest rates. And it was a lot cheaper to get a good deal on the rate and points and closing costs with 20% down. And the fact right now, when you're buying those properties, you get a heck of a lot better deal to put 25% down, 30% down. The more skin in the game from the investor or second home, the lighter the costs are on 25 and 30% down. Do you agree?
Yeah, absolutely.
Significant. And back then, it wasn't like that. So that's why I would say, hey, put your money towards down payment and get a better deal, and also have them pay some closing costs as you're looking to buy. I'd actually take that to a primary residence as well right now.
It's kind of like financing in any cost that you have. I think it's a way around that. paying costs out of your pocket, really.
Yes, and specifically on investment property. To take my thought back on primary, I wouldn't always do that on a primary.
That's
but
fair.
investment property, second home, I would. You are listening to The Plan. Mortgage managing software is available to you at fortheplan.com. And why do you want that? What's the catch? There is no catch. We're not going to call you and bug you. We just want to make sure we service you, give you the most value out of that property that you may own or the entire portfolio. You know, you can add 3, 4 properties, 5, 6, keep them all in there, get the value reports and get all the alerts you need on the mortgage part of it. So if you're an investor listening, that's some good software. What do we ask in return? There's got to be something. We just ask for an opportunity to help.
Chance it's your next mortgage.
That's it. Yeah, and maybe we can dot the I and cross the T on any extra mortgages that you have of modifying or moving them around, adjusting money. Debt managers is a lot of what we're talking about. So, all right. That was my whole thing on investment property and what I do on the market conditions right now. You know, there's a headline out there of turning renters into buyers and really talking about building houses and building them and then renting them out.
That's been hot around here. At least Charlotte area, I can count probably 3 or 4 off the top of my head just around the suburbs of these new rental communities, I would call them.
Where they build it for the purpose of just renting it out and hanging on to it.
Yeah. And not a lot of cash flow right now. I am curious to how they're doing that.
Well, do you think that the cash flow with where the market's at, I wonder if that's, you know, if somebody calls us now an investment property, we're talking, I don't think cash flow is the king right now where rates are at, but your appreciation still is.
Yeah, that's true.
Are they putting in, you know, I'm thinking of a couple different subdivisions that have actually built properties for the purpose of renting them.
Yeah.
And subdivisions, not just one house, 2 houses, like houses, man.
Yeah, that's what I'm like. These are like communities.
Yeah,
I mean, like,
that's
these are
what I'm
like
saying.
20 plus houses.
And they're good quality homes from the outside. I have not gone in or looked at any of them, but they're like neighborhood houses you would buy in. You know, I'm thinking like even Morrison Plantation was a good popping neighborhood back in the day, a while back, and it still is, but similar to that. But now, wow, they just rent them.
Yeah, only renting though. I've seen townhouses that they do this with, where there's about 20 in a row in downtown Mooresville. I've seen the houses like you're talking about, similar to like one of these track builders, one of those kind of neighborhoods. There's a lot of that. Becomes a hot product right now.
We had a realtor in who bought one in a new subdivision.
Yeah.
We had, you know, she bought that one DSCR where you don't even need to qualify. That's one of the loans that are out there. I say you don't, but as the borrower, you don't, just based on the property.
Yeah, mainly just
rental income.
Mainly just need 20% down for that product.
And that, explain that a little bit. We kind of skim over that on some, but let's spend a minute on DSCR and how that looks for an investor.
So you can go 20% down. I mean, you need I believe it's a 680 plus credit score, but you can go based on the projected rental income. So we can, as long as the payment is covering the projected rental income, or I'm sorry, other way around, wouldn't it be? The rent is covering the payment. You'll get a good rate, market terms, I would say. But let's say that it's not
Give some numbers. Like that's where it helps out. Like, let's say my mortgage payment's going to be $3,000 on this house. What do I need to rent it at in order to qualify at this? $3,000, right?
Yeah. Anything over 1 is great. Meaning as long as it breaks even or cash flow.
So you got that mortgage lingo going.
Yeah.
See, it's 1 is like basically 100%. It's like par.
Yeah.
Let's go back to your golf game. That's like par in it, right?
Yeah, it is.
So now well, no, it's not like golf because we're you want to go under in golf, not over. Now, let's give the example though. You get $3,500 in rent, and your payment is $3,000. You get a better rate.
Yeah. But let's say it's flipped, your payment is $3,500 and you get $3,000 in rent.
You're getting the worst rate.
Yeah, so you're going to get a little bit lower of rent, but we can add a prepayment penalty to it to bring down your interest rate.
Oh, that sounds great.
Which, right.
And we can fix it. We'll just charge you on the way out.
Yeah.
No, but that is part of I was going to bring that up as part of the bad part about that loan. It does come with a prepayment penalty.
It doesn't have to come with it, but
man,
if you do add a prepayment penalty, you'll see the rate get a lot better.
You should at least do 1 or 2 years.
Yeah, I would agree.
And a lot of clients have done 3.
Yeah.
And the more you can do 5, and the more you do, the better the rate is. But there isn't much of a swing from the 3 to 5.
Yeah, so I would agree. And locking up money for 5 years, that's quite a long time. It's just a 5% hit or penalty if you pay it off.
So I'd stay in the 2 to 3 years.
Yeah.
Still a lot of cash on the prepay.
Yeah.
But you don't have to qualify. You don't even have to have a job.
Yeah.
Like you can literally say, I want to buy a rental. I've got cash.
Yeah. We've had buyers come in that their full-time job is an investor and they don't have any income to really show. So that's perfect for them.
And they're banking on a lot of the short-term rentals right now. It's pretty hot. So these guys, they must see, the value in buying property. They'll build a whole neighborhood on it.
Yeah, right.
Yeah, I could see that. I do get it. Big bucks going into it, though. That isn't cheap to do that. A lot of developing.
I am curious to see if it holds out like those communities that we're talking where they have rentals of several properties. I wonder like what are the plans with those? Are they always going to rent?
Yeah, I was just thinking, what's the long-term strategy, right?
Yeah.
Yeah,
maybe,
I don't know.
Maybe is it a rent to own? Like they rent it for a year or two maybe and then have it under contract?
That's not how I'm seeing a lot of them
either.
presented, rent to own. I've done several of those where I've rented houses for someone to own. It done it here not too long ago. Worked out great. It's basically the buyer's able to lock down the price while the seller gets security of having it somewhat sold.
And essentially, I mean, for those that don't know what rent to own is, they're giving you payments such as rent, like $2,000 a month, let's say, and then they have it under contract, quote unquote, to close in 2 years or whatever the agreed upon date is, right?
Yeah. Discounted price if they do it early, penalty if they do it later, or it's voided out and keep deposits as you go. See, there's a lot to that part. I don't know if the interest on these guys that are building neighborhoods is rent to own. I think it's rent them, hold them for 5 to 8 years, and bye-bye.
And then start
selling them all.
Yeah, I was going to say right now, it doesn't seem like that'd be a ideal situation, rent to own, because a lot of appreciation's happening. Would somebody now want to?
Sometimes you can lock that price in if you're renting to own. So like if I do the agreement with you today, like let's say, hey, I got this house, it's $400,000. You want to rent it, it's $2,000 a month, $3,000 a month, whatever that number is. You got 2 years to buy it at this price. So see, I'm going to lay that price out typically right there to you. Now, am I stupid for doing that? Well, 2 years, dude. Is it kind of? It could be, yeah. But if I feel good and it's got it done, and maybe sometimes you do an inflated price and they get a credit every month towards the rent they're paying.
Oh, okay.
So, or you could do a combination of both. A lot of ways to put that together.
Yeah, I see what you mean. Because I remember we had a buyer a while back that had a lakefront property at 900, and he had it rent to own for a couple of years. It was when I had first started, and I didn't really know what rent to own was, but he was renting it, and when he went to go and buy it, he had it under contract for 900, I think it was, and it 950 actually.
Appraised for more.
Yeah, appraised for like 1.2, I think.
Yeah,
it was.
so the buyer got a good deal, and he kind of got the short end. He left 200 on the table.
Oh, that's interesting.
But he locked him up for a few years of renting it, and that was stability, right? So there's a lot of reasons why or why not. And I've done it personally. I think you can win either way.
Yeah, buyer won that situation, it sounds like.
Yeah, I did. Yeah, I did. For having a couple hundred in equity, renting to own, that's not a bad gig.
That's perfect.
But as we look at buying the house, they're looking at that value, not the cash flow, to be able to make their dollars. And I think that's the end result on it. I can't imagine, if you fast forward, like think of them selling, right? What are they going to do? Let's say that I've seen neighborhoods as big as 30 homes or more. They list them all. I'm going 5, 8 years down the road. What do you do? List them all at the same time?
That's a good question.
What if you do? And what if you could have really good comps and you own all of them?
Yeah,
they're going to compare that. Like when they sell one, they're going to compare the house 2 doors down if it just sold.
Yeah, it could be a really good,
really bad.
That's true. There's a couple situations that could come out of that.
Yeah, right. You're kind of. I haven't really seen someone do this in my history past of doing it like that or being known as that.
But these communities are definitely a newer thing. It seems.
I think so too. Yeah, that's what I'm saying. I haven't seen that in the past.
I've seen a few of them out there recently, but I mean, call it even 2 years ago. I don't recall seeing a rental community.
We've got a cool segment coming up. Why 7 reasons clients switch mortgage professionals. We're going to cover today. I know it sounds exciting for the listeners here, right? But here's what a big study was done. One of the top real estate trainers, Tom Ferry, did a study on it and rated all these reasons on it. And we're going to cover those 7. And what the list uncovers is what to look for when you're hiring a mortgage planner, mortgage advisor. And these are things that will tell you what we do and why you would hire us over someone else that if you're looking for a mortgage. Some people, I think, still will think that, it's just easy. I can walk into the credit union. I can walk into my bank and just get a mortgage. And it's so limited options in comparison to what we can offer and how we manage it long term. The bank person, I'm not talking bad, I'm just saying what reality is, usually doesn't stay in touch year after year, making sure they're somewhat managing that, even though you may be paying your payment to the bank. They still
That's
don't
true.
reach out and they're not touching base. And there's a part of, that's why the software and the other things that we provide, while it may cost a little bit more, they get a big benefit long term, and they're part of the family. I love the letter we send out just before closing. It says, "Welcome to the family," and really outlines what our services are after they get the house.
Yeah. I'm curious to see these top 7 reasons as to
I hope
why
we have
people-
them covered.
Yeah.
I think we do. You're listening to The Plan. Brad Roche, the mortgage planner, joined with Jacob Roche, 704-412-2727. Direct dial into the show. Check out DSCR, House Hacking, your mortgage planner university, all listed, all available at fortheplan.com, including a couple listings that are on the site you want to check out. We've got numbers broken down for you as well. Check out the hot properties. We're going to take a quick break. You're listening to The Plan.
Welcome back to The Plan. This is Jacob Roche and Brad Roche, the mortgage planners in the studio for theplan.com, 704-412-2727. We were talking about top 7 reasons clients switch mortgage professionals. And
I hope we don't fall into any of these negatively.
yeah, hopefully not.
I'm kidding. Did you read through these?
I did a couple.
Kinda
Yeah, a
interesting.
couple of these. Yeah.
Kind of interesting. It's after doing it, this is 3rd generation business. Us doing this, we know how to do it right.
Yep.
And I think that there's a lot goes to it. Emotions are in the home buying, selling, listing, investment property. There's a lot of emotions in this process that can take over. But number one thing you have to look at is, and I'd even ask, what's your process for communication? I know it sounds weird, doesn't it?
Yeah.
Like,
Yeah, it does.
hey, what's your process for
No,
communication?
I've heard. I had a buddy that didn't. I had just started in the industry, and my buddy, he didn't even know that I was a mortgage lender. And I asked him where he was in the process, and he said, "I haven't ordered the appraisal yet." And I said, "Well, I'm happy to help out." And he told me, he said, "Yeah, I need to switch to you guys. I've been on the he said, I've been on the phone for 4 hours trying to get a hold of my mortgage advisor."
Dang.
So I think that communication can get a lot worse than what we think is
4
bad.
hours.
Yes. He was on the phone on like their customer service line waiting for his loan officer. He said
Nice if they could call you back.
called back. He said he called back 4 times and in the same day, and he still couldn't. So at that point, he felt that it was a good move to switch. And we did help him get that mortgage.
I think it would be. One of the things we have done consistently for over 30 years now is Tuesday updates.
Yeah, it's a big piece.
It's huge, man. Every week, and it's neat because even during the technology of how things have become more technology driven in our industry, as well as a lot of others, of course, how we continue to still do the personal touch Tuesday concierge service of an update, real person. We call you, we update the agents, and it's all done guaranteed by noon.
Yeah.
Every Tuesday.
And I think not even just the clients like it, but I think everybody involved just loves the Tuesday updates. It makes it feel like all the T's are crossed, I's are dotted, and it really helps out making it a seamless transaction.
Well, because
really.
you can leave something hanging.
Yeah,
I've been
exactly.
through many transactions, even with doing these updates. Oh, hey, I forgot to send you this addendum. What do you mean? Or hey, I forgot to send this, or hey, I can't get there. Oh, I didn't know you needed this. Oh, I didn't get the email. Oh, I missed your call. Oh, that was you who texted? Come on, man. There's so much going on.
Yeah.
Where you really, that just kind of brings it all home on Tuesday. And we guarantee it every Tuesday by noon, guaranteed. That's part of our communication in making sure that we take care of you. Now, number 2, limited personalization of service. Some mortgage professionals apply a one-size-fits-all approach, making the client feel number rather than individual with unique needs. I think that comes down to our planning call right off the bat, don't you?
Yeah. I think it's a lot of products too, meaning like personalization, not all one size fits all, meaning like maybe somebody's self-employed. Well, if you don't qualify from your tax returns, I think a lot of credit unions, banks will say you're out.
Well,
Sorry.
yeah, true. That's true.
So like with us having no ratio where we don't use any employment or income, even DSCR where we don't
Right.
use any income, just projected rental income, I think that is a bigger piece. But I mean, a big piece.
I was
But
thinking,
I
you
agree.
went down a whole different path, which I agree 100% with. Actually, better point than I was making. I was thinking, they get to see a comparison in their options
Okay.
on it, but and personalized service, I think that comes of not just relying on the computer do it all, and here's your little update as you move through processing underwriters, having somebody actually working on that deal with you, celebrating it. I've never lost sight, or I hope I don't lose sight of how cool it is to buy a house. I don't even care if it's an investment property, your first house, second house, you're moving, or it's that rental. Come on.
It's always very fun.
It is. There's a lot going on, and it's neat to be a part of. And I don't ever want to lose sight of that. And I think that's where the service comes in. We have should we tell them what we do afterwards?
Yeah,
Like
I think
what
so.
we do, we should. When you get a mortgage through us, you get a black box. Yeah.
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 Yeah, it is.
and no, it's size. It's a black box gift. Gift box.
It's an exciting gift too.
It's got crinkles in it. The little crinkly paper in there.
Yeah, it's got all kinds of surprises.
It's got a cool book. Won't tell you which one it is, but very personable to us, and hopefully helps you on your journey. It's got this awesome called Mortgage Planner Favorites. What's your favorite on that?
I think I did Barcelona. It's
That is your favorite?
the burger joint down in downtown Mooresville.
That ain't just a burger joint. That's one of the best around now.
Yeah,
they do it right. That is the smash burger version of burgers.
Yeah.
I made one the other day on the Blackstone Grill. We gave away one of those not too long ago in our contest.
Oh, yeah.
Yeah, they won one from Lowe's.
I wonder what they're doing with it now. I wonder what
Hopefully
they made.
using it. I did a great hamburger on there. I know how to do it. I do. You put the onions down first, then you put the ball patty on it, and you smash it and let it rock. Don't flip it. Let it go for probably 3 to 5 minutes, and then flip it.
I'm still yet to try that. I still gotta.
It is. I did it yesterday.
Gotta get it done.
I have a picture of it. I do. I have a really good picture. If you're on the line right now or listening on the radio, there you go. What do you think of that? Right?
That
Come on,
really
man.
good.
So you get Mortgage Planner Favorites. I'm off topic. So yes, I do make good burgers, and I've learned that one. But we have Mortgage Planner Favorites. So if you're new to the area, you didn't get a mortgage through us, go to fortheplan.com. Check out our favorite places. A lot of local places that are pretty cool that you can check out as well.
Yeah, a lot of them.
You've been to my favorite out there at the lake.
Yeah.
A little bit of a different spot.
Havana 33.
I love that. That wasn't the one I was thinking of. We got to leave some surprises, but that one, Sunday brunch, saxophone going. Come on. Does it get any better than a breakfast Cuban?
Nope.
Ham,
it doesn't get better than that.
Dipping sauce they do it's good. So if you want to know where to get a mortgage, we will help you. And if you want to know where to get something good to eat, we'll help you as well. Fortheplan.com. What was the number? So it's personalization. Do we not have it covered on that one, bro?
I think
we do.
So.
Now, let's not leave one out. Personalization.
So
I really enjoy
on the personalization. You're saying that from our mortgage comparison, we showed personalized options for what you're doing.
Financing, we can personalize that towards you because whether it's closing costs, down payment, there's a lot you can adjust on a mortgage to. Let's go back to the car. Here's your payment for 60 months, 72 months, 36 months, this much down, that much down. There's options there. And we put it in a way to look at over a 5 to 15 year period.
Yeah.
That makes the big impact.
Oh, okay.
Being fast forward. So we went down a lot of different tracks, and I like the favorite one was the Mortgage Plan Favorites where we talked about hamburgers. So if you want personalization service, go to fortheplan.com. Check out Mortgage Planner Favorites. Dig into some of the local places that we have wined and dined and enjoyed, and you can enjoy too. And at closing, after closing, you get that black box. We send you to a couple of them. It's kind of a fun thing to do. So we hope to have you as a client of ours soon. If you know a friend or a family member going through the journey, you can check that out as well. We've got 6 stages of through the life of first-time home buyers, second buyers, home buyers, investment property, second home, investor, empty nester, retiree. There's 6 stages. I think I just named about 13, but my number's off. But that is a big part of it. What do we got next here? Uncompetitive rates and fees.
Yeah.
I think that's important.
I do too. A lot of people... headline or this article had said a lot of clients become frustrated. They discover they can qualified for a better, lower rate somewhere else.
Could I answer that question? This isn't, if you're listening, doesn't give me a license to charge more. But if you do offer more, I would rather have the better offering than not the better offering. Meaning, I know you can go to an online company and get You can go to the store and get a pizza, or you can make a homemade pizza in an oven at home. I mean, which one's going to taste better? No offense to the store-bought pizza. You can buy a store-bought pizza. You can go to that little joint down there downtown you like with pizza. That's Ghost Face Pizza, some of the best around. We're naming some of our favorites here, but it's going to be a lot different. Well, the more you get or the better quality of service you get, do you think it's the cheapest? Like if I got in a car accident, do I want to hire a bad attorney because he's cheap at $60, or do I want to win the case and pay 110 if I need to win?
Yeah.
Right? You get what you pay for is my point.
I agree. I think that there's a lot of savings that can be done on our side that can help clients.
And it's not just at the beginning, it's also the 5 year, right?
Yeah, exactly.
So I think that piece is probably one of the bigger ones that we look at is how, number one, we're not going to be the cheapest, but you are going to get the most value out of using us at fortheplan.com because we save you more money over the time you own the house. That's just what ends up happening. It's not a per deal thing. It's a lifetime thing. And that's what you do with our clients becoming clients for life. We've got a few more to cover. We're going to take a quick break and see where else do we cover you on a mortgage. Go to fortheplan.com. We'll be right back.
Welcome back to The Plan, 704-412-2727, or you can check out fortheplan.com. We started talking about the 7 reasons why people switch mortgage professionals, and we were on number
I like
3.
to call this the seven things you should ask your mortgage professional. How do you communicate?
Yeah, that's true.
What is your communication style? And I'd like to say guarantee. What's your guarantee?
Maybe we should switch this to the top 7 things you should ask your mortgage professional.
Number 2. What personalized service do you offer going through the process being a local lender? And yes, it's important to use a local lender because the real estate agents respect it more and you're going to offer together by using somebody local. I think that's a big deal. How do I know your rates and fees are competitive and what's all included with your offer? The next one I would say is lack of long-term. This is the next one. Lack of long-term financial guidance.
I think we covered that a little bit.
Didn't we?
Yeah.
5 years. We look out 5-15. We check in every single year in our annual review. You get a little text message, kind of like for being at the dentist, which says, hey, have anything changed in your lifestyle, history, and things going on financially that we could help with? Maybe you had a baby. Maybe you got a divorce. Maybe you're getting married. Maybe you're downsizing. Kids moved out. Lots going on. So we hit a check-in every year with them and make sure we got them covered.
And it's good. It's quick. I would say it's 1 minute. You don't even have to go and pull your mortgage statement.
But at least brings them to top of mind. If there's something we need to look at for them, we can handle it. Yeah, right. It's quick and easy. So yeah, I think we've covered that. Number 5, failure to adapt to market changes. Man, that's like what we do every day, isn't it?
Yeah.
Adapting to the market change.
Well, I think in terms of like COVID rates, when rates were at 3 versus now where rates are at, call it almost 7 today. Failure to adapt is failure to show the different options that you can do to be able to get that lower interest rate.
We talked about this one. This was one we talked about on the way in, and we talked, both came to mind, the buy down and being know how to use the temporary buy down, how the importance of it versus a permanent buy down, and being able to get, that's changing with the times, using the programs. Here's one thing that I know. As rates go up and things happen in the mortgage market and housing market, typically the guidelines and programs and regulations tend to come around it to make it easier to get financing. Do you know what I'm saying?
Yeah.
They open up more doors like they just have. And I think that's like ratios either get expanded or something's changed. So it helps out. We do have a big news coming up in January. The limits are going up. On all the loans. What did you see the one was going to be around?
Conforming is going to move to 802,000.
That's what I thought.
And
which is, you knew the other ones too?
FHA is going to be 528,000.
Wow, man. I remember when it was 79.9.
Yeah, well.
I'm not kidding.
I remember when I first,
it was
few years back.
117,350 for years, man.
Yeah, well.
Oh, yeah, it was crazy.
Yeah.
And now to think you're hitting over 500 on FHA and 800 conforming.
Every year I've been in the industry, they've moved it up so far.
Yeah, it's been consistent. They didn't do that
4
always.
years.
Not that I noticed anyway. And besides, I'd say even over the last 10, they've been doing that. Every year they'd be adjusting it. I don't know if that's partially because price changes, competitive and going up.
Yeah, that's true.
Plays a big part.
Adapting to market changes, though. I mean, that's going from buying down your rate permanently during COVID, like buy it down permanently to be able to get the lowest interest rate out there. Well, now things change. When you're going to buy now, we tell you to go and get seller credits. We probably weren't telling you that in COVID.
No.
Because it was impossible. There's
You couldn't get them anyway.
So many offers on the table. But now, adapting to the market, we're coming out with a 3-2-1 buy down even where your interest rate today, it's at 7. We lock you in. Your first year interest rate would be at 4.
Crazy.
So there's some crazy products that we have out there to be able to adapt to the market.
Helps out a lot. 704-412-2727 is our number to the office, or we can take questions from you at that point as well as go to fortheplan.com. Number 6, poor problem solving skills during complex transactions. Let me ask you this question. You've been going for a while now. We do a lot of loans. We do a lot of loans. I would consider clientele is in the higher credit score.
Yeah.
Like I look at the averages and know we've got a really good credit score average of clientele. And the reason I'm saying that is when you think everything's good and whatever it is good, does it end up happening is easy? Meaning, how many problems have you seen with good clients who didn't expect a problem coming up in the transaction? Like, don't you think it happens more out than 2 out of 10? It's 4 out of 10. There's some stuff maybe. That was my guess. I was going to ask you, and I just answered my own question.
Well, sometimes it's not even the client. It can be a well-qualified client that we have approval on, and it's the property that's got the problem.
Yeah, I meant overall, right?
Yeah.
I mean overall. It's not always a client having the issue with it, but it's like there's just stickiness in the deal that needs to be handled by somebody who's dealt with the problems before.
2 out of 10, I would agree with that.
No, I'm even saying 4.
Oh, really?
Yeah, you'd say less. You got better deals going than I do. Is that what you said?
That's my with that.
I feel some days I feel like 8 out of 10, but things come up. We just had a recent deal that came up. One of the sellers passed away.
Yeah.
That's crazy. I mean, what do you do? And we've been through that transaction. You got to have people who know where to go get things recorded, changed, updated on title, and people working on it in the same motion and communicating on it.
Well, even like right now, there was a property that went under contract. I believe they are not first time home buyers. They're move up buyers. But they
Phase 2, journey 2.
Yep, exactly. But they got an inspection. We had the appraisal ordered, and it looked like the structure of the entire house was falling apart. But this house is brand renovated. Good borrower. When I look at it online,
hammers.
I look at it on the property online too, and the property's newly renovated. So
beautiful,
I would think no issues to it. Yeah, it was a beautiful property. And then sure enough, an inspection comes back and the structure needs to be changed. Yeah, exactly.
Really good idea. They got one.
Yeah.
What happened?
So that's problem solving and complex transactions like we're talking about now. We had to had them come in with 2,000 less to close. The listing agent and buyer's agents chipping in some of theirs commission, and then the sellers chipping in some as well. So a little bit from every party to be able to make it so that the buyer of this transaction will still go through here.
Too.
Yeah, very
really
good
enjoyed.
clients.
We had a good planning call with them. You call us up, we get on screen, show you all the options that are available on your deal. That one, that's a pretty interesting transaction.
Very complex and a lot of problem solving.
You're number 6. That was where we come in. It helps. The more deals you see, the more ways you see to score.
Yeah, you know how to
get through the defense.
You know how to adapt to it a little bit better.
And that helps a lot. Now, that deal too, that one, there's two good things on that deal that happened for them. They got that all worked out on the foundation. But we also, they had some insurance in there.
Oh, yeah.
That you remember we saw their monthly insurance. What was the sale price roughly on this?
I think it was $250 in Kannapolis, which is I would say
$250,000 sale price.
Yeah,
and the insurance on it though, monthly insurance was like $210 a month.
Yeah,
and that's high because we see a lot of deals. We see it. We said, well, whoa, that's high.
Homeowners insurance, right?
Yeah, home insurance.
Yeah.
Wow, that's high. So we made a couple phone calls, just got a competitive quote, same coverage, and had them check that out.
They cut it in half.
They did.
It was great.
So see, well, you're going to save in other ways if you're hiring someone who's good. That's the kind of stuff you want to hire someone to be able to help with.
Well, that's kind of what we were talking about earlier. Is that like, well, yes, you may be saving, let's call it $20 in a rate from 6.5 to 6,375. Might be saving some there, but then, well, we might save you a little bit more on insurance, or we might be able to get private mortgage insurance off so that you don't have to pay for it monthly.
And you may never talk to them again who gave that
That's
to
true.
you, and now you got nobody managing it.
Yeah,
what's that worth?
Well, and then you can, let's say you put 3% down, you're paying PMI, and nobody tells you what a refinance is. Well, you can drop off your mortgage insurance, a little bit quicker than what most people think. So there's a lot that we can do by managing your mortgage and checking in with you every year.
Now, we've got a special event coming up for our past clients, professionals, and partners. If you haven't heard, we've got our PI event coming up. We'd love to have you. That is taking place. Make sure you all attend that if you can. We've got a registration page on the site. A lot going on in the mortgage industry, real estate industry in general, slowdowns and speed ups. And I think that if you are interested in buying a house or getting the equity, I don't want to say out of the home and used for other things, but if you're looking at entertaining any refinance, if you've been at 7% or higher, and you don't have your mortgage managed right now, I think that would be important for you to go to fortheplan.com, download that software, at least get the alerts, give us a shot at your mortgage. If it works out, we'd love to help you. But that's a big deal. If you're over 7% right now, bought a house in the last couple of years, 3-4 years, got a rate around 6.5%, 7%, anywhere in that frame, go to fortheplan.com and download that and register it and get the property managed.
Yeah.
The mortgage.
Yeah, and make sure that we're watching your rate too. You never know when we may be able to save
That's
you.
it. All that's kind of built in, though. You know, they're going to get alerts on that and everything, and then we can move quickly like the market does. And I think that's what's important. I want to share one more giveaway that we have for you. You know, we mentioned Mortgage Planner Favorites, and if you go to that website and scroll down, you're going to find local butchers to the area that we have links to for you to be able to go find some fresh meat and check it out. I know it's not, you're looking at me like, why are you telling us? Because it's cool. I love going to the butcher on a Saturday and cooking fresh steak. I have another picture of that one, and if you'd like to see it as well, just in case you would. But we also have your golf on there, and that's a really cool ebook that you can go check out. If you are a golfer, go check out some of the ebook Jacob put together on that. It's pretty hot, man. It goes through some of the greatest courses around here, as well as some of the best ones you've played as well. Tell me a little bit about what's all in there.
There's some good, I would say there's Charlotte local, but then there's also best public, best private courses.
How far do you go out around here?
I go about North Carolina in general, really.
Oh, you did? What's the furthest you just got back 4-hour drive.
First I went is probably Cancun. So
no, I'm talking around here, driving.
Hilton Head.
My man's an avid golfer. He goes out and you went to do the closing we talked about in the first segment there. And you left your rangefinder after you drove an hour, and you went back and got the rangefinder and had lunch on the beach again.
Yep, one more time.
You're a funny guy. What a great way to do it. We'd love to help you out on your next mortgage. Thanks for tuning in today. fortheplan.com. Get your mortgage managed. We've talked about it enough on the show. We'd love to have you a part on it so you can get that free software and a value report each month. See you next week.